afternoon, everyone, and happy Thursday. You have Alyssa Corman, Ken Shreve here with a look at the stock market today. We're going to break down the action in the major indexes. Tech stocks getting hit particularly hard today. Small caps too, Ken. And we did see some bright spots, though. Two earnings-fueled movers in a big way.
Yeah, so in the retail sector, we'll take a look at Williams-Sonoma, which gapped up powerfully on earnings. Also a very bullish move for a recent IPO upstart. And then we'll take a look at Pinterest, which is continuing to look weak after getting some resistance at its 50-day moving average.
Yeah, continuing lesson there for Pinterest. But first, a look at the NASDAQ here, the tech heavy index getting slammed today, down over 3%. The Russell 2000 down 3% as well. The S&P 500 down 1.5% on the day, and the Dow blue chips down about 0.5%. So holding up the best relatively here. So the NASDAQ continuing to lag here, Ken, getting hit hard in a big way. The culprit, those treasury yields.
Yeah, another big move in the 10-year Treasury yield today. So again, the bond market is really kind of worried about inflation for the U.S. economy as it reopens. And the Fed meeting yesterday, they raised their GDP forecast quite a bit this year, all the way up to 6.5%, I think, up from a prior estimate of 4.2%. So, bond market is worried about inflation. The Fed not so much, but these rising interest rates have really weighed on technology stocks lately.
That's right. And you can't even see how sky high it is really here. It's getting covered up by another line on the chart. Here's a kind of a visual representation of that 10-year yield there, Ken. And we also want to take a look at the Russell 2000 today. So a huge move with this upside reversal from that short-term bottom there. But getting hit again today, we are now at the 21-day line for small caps.
Yeah, and you can see volume was pretty heavy in the IWM today. It looks like it's going to come in, higher than what we saw on Wednesday. We also saw higher volume on the Nasdaq and the S&P 500 today. So it looks like yet another distribution day for not only the Russell but for the Nasdaq and the S&P as well. This is a problem for the Nasdaq. This is going to be distribution day number 6, I believe. So in fact, if we can just go back to a daily chart of the Nasdaq and you can see the distribution that really started in the index after it hit a high of 14,175. So distribution is synonymous with institutional selling. Obviously, a lot of money rotating out of growth stocks. We also saw a fair amount of distribution in recent weeks in the S&P 500, but all of these reopened stocks, pushed the S&P 500 to a new high, even though we were seeing signs of institutional selling in the S&P 500 as well. So it's really the Nasdaq that looks to be the same story. It looks to be in the most trouble here, and I think the percentage decline today was have to go all the way back to October 28th to find a 3% decline.
Yeah, so that is definitely not very positive, but it wasn't all gloomy skies today, Ken. Williams-Sonoma, ticker WSM, had a very strong reaction to its quarterly earnings report, gaining almost 19% on the day, a huge gap out of this cut base here, that relative strength line hitting a new high. We have bottom line growth of 85%, an acceleration of top line growth hitting 24%. So a really impressive technical move today here from Williams-Sonoma.
Yeah, the stock closed just outside the 5% buy zone from that 151.26 buy point. But, this is obviously a top performing retailer. 3 months ago, they had a very strong quarter. You noted the accelerating revenue growth in recent quarters. A lot of these stocks that are producing these really, really big earnings in recent quarters, obviously they're going to have tough comparisons. So some analysts are wondering, are they going to be able to maintain this rate of growth as the economy reopen? So that is a question, but we did take the opportunity to add Williams Sonoma today to leaderboard because we like these breakouts from consolidations or cut bases, and we got it in Williams Sonoma. It's probably a little risky buy at current levels, but we like these gaps up because if it's truly a strong stock, we'll get some sideways action after the gap up, and for new buyers can get an alternate entry point.
That's right. And this is maybe where an intraday chart could have helped you a little bit, looking at that hour in the first hour of action rather, and putting the odds in your favor, maybe seeing it get to that out of that first little consolidation after the gap up, just to make sure that the opening price wouldn't be the highest price of the day, because sometimes that happens on these earnings gaps.
Yeah, absolutely. In fact, in the early stages of trading with WSM, it actually faded pretty badly, but it didn't take long for the stock to get up near session highs, and it really, it made a strong move over the 165 level. But the broad market really just started to weaken and weaken and weaken. So for WSM to finish in the top half of its intraday range, I'd call that a small
Mm-hmm.
victory, and very heavy volume, and some short interest in this stock, but not. I wouldn't call this just a total short squeeze today. I think the short position, 5 days, 5 days based on the stock's average daily volume, it would take 5 days to cover the short position in the stock. But when you look at the total number of shares held short compared to the
Mm-hmm.
float, it's less than 10%. So I wouldn't call it a heavily shorted stock, but great earnings report. They announced a new $1 billion share buyback, and they also raised their dividend to 59 cents from 53 cents. So a lot of good news.
The story definitely there with Williams Sonoma. People either buying their first homes or upgrading homes in those COVID era, revamping the inside of their houses. So we'll definitely keep tabs on Williams Sonoma. And you know what else moved big on its earnings report today? Upstart, ticker UPST, got a huge kickstart from today's quarterly earnings report. The first quarter reported as a public company. This stock went public last December at 20 a share. It had a great initial IPO run up, Ken, but got hit very hard, so kind of fell off of our radar. But this puts it squarely back in focus. This huge move, I mean, almost doubling on the day. I mean, there's something that investors are really liking about Upstart right now.
Well, I think what they really liked was this acquisition of Prodigy Software, and they're a provider of cloud-based automotive retail software. And the company said that this acquisition is really going to accelerate Upstart's move into providing affordable AI-enabled auto loans, which is just a huge market. So I think that is people look at this acquisition as having a lot of synergy and something that that Upstart is going to be able to monetize. Now, of course, you see a 39% jump in revenue, nice acceleration from 32% growth 3 months ago. Again, this is a very powerful move. When you see volume this heavy, there were definitely some institutions in there buying. So do you buy it up here? Probably not. But similar to Williams Sonoma, I mean, this is a really strong start, and this acquisition of Prodigy Software is really going to impact the bottom line and top line significantly. You'd expect the stock to be able to hold gains here for the most part, move sideways. This is another just great stock for the watch list to see if it can hold gains, move sideways, and then maybe we get a better entry point.
And some can slim traditionalists may see that negative on the earnings number to not be a good sign, but we've seen the market really rewarding that strong top line growth. You mentioned the acceleration, Ken, and Upstart really has that new. Today's move does appear to be a game changer. Got that new price high, this acquisition. So it does have a lot going for it. Forward looking earnings estimates also look promising. So yeah, we'll have to see if the technical action can hold up here, and the stock can shape up a new buying opportunity for
It was a
investors.
nice winner on leaderboard for us. We did participate in a lot of this stock's gain when it broke out right around 50 and then ran up to 105. It started to pull back, and we eventually took profits. We gave some gains away, but we're able to lock in a profit here. So this one's definitely back on our radar. Again, not going to buy it up here, but if we can get some good tight action on the daily and the weekly chart, we like it when a stock holds gains after a bullish move like this. If
Mhm.
it can do that, it may give us a good entry.
Fantastic. And we also want to check back in on Pinterest. The story continues here with the social media stock, which was our stock of the day yesterday. We were pointing out in that article, as well as IBD Live in the morning, that yesterday looks like a good time to be taking some profits, Ken. If you really were just wanting to hold on to this one through that last sharp sell-off, with it hitting resistance at that 50-day line. Things were looking somewhat positive yesterday for tech stocks and the Nasdaq, but this 50-day line really proving to be a resistance level here, Ken.
Right, and you can see how the stock was rallying back in recent days and came right up to its 50-day moving average. But look at the volume. There really was just not a lot of volume, especially in the past four up sessions. So you had some heavy volume declines when the stock, or higher volume declines when the stock took out its 50-day moving average, kind of wedging higher in light volume. So to me, this stock, I mean, clearly it's flashing profit-taking signals. If you still have a gain in the stock, it looks like this is probably just going to calm down and pause and rest for a while. But sellers still look like they're in control here, and frankly, a lot of other technology stocks are showing very similar action, coming up to their 50 days and getting turned away. We saw that with PayPal today, PYPL. This is another leaderboard stock. Nvidia getting turned away at its 50-day moving average. The number of stocks that fell below their 50-day lines and are getting turned away, just indicating more weakness. There's a pretty large supply of them out there right now.
That's right. And it's exactly why we've been focusing on this rotation out of tech, looking at all of these other areas of the market, presenting actionable setups and not trying to go back to the same well of what worked in 2020, even though these stocks have seen very impressive moves and they have that fundamental story intact, but the chart action, not there.
Yeah, I mean, like I've been kind of beating this drum, but I'm looking at big winners in 2020, like a Zoom Video or a Peloton or a DocuSign. It's whether or not these stocks are going to be able to resume market leadership is a very big question mark right now, only because they've fallen so far off their highs. When we do get that sign of strength in the Nasdaq, and we do get a follow through day, and we start to see money flowing back into the Nasdaq and technology stocks, we're likely going to see a new crop of leaders. Many of them might be IPOs. It could be an upstart. It's just you're going to see a lot of opportunities in new issues. But the stocks that were the biggest leaders in 2020, many are not going to be able to lead the next uptrend in the Nasdaq.
Which is what is so great about IBD is we're not just looking at the fundamentals. We're not just looking at the technicals. We're really combining the two and looking at all of these different ingredients that make stocks great. And there's no perfect stock out there, but we do try to put the odds in our favor by really harnessing the power of that technical strength with those fundamental ingredients as well. And you guys are doing that every day on Leaderboard, which we have free access for right now.
Yeah, yeah, absolutely. So we're halfway through free access week. No credit card needed. You can just go to I think you can go to leaderboard.investors.com. There's right on the homepage of investors.com. There's a banner right at the top. You can test run it. We've been fairly active this week. Again, we added Williams Sonoma today. Added some new names earlier in the week. Put a name on the watch list today. So just giving people a lot of ideas.
That's right. So definitely check that out. Just to reiterate Ken's point there, go to the homepage of investors.com. You're going to see a top banner there or some other messaging in our spotlight area about free access. You can click on that to check it out. All right, everyone. Thanks for tuning in, and we'll see you right back here tomorrow.